Hello, everybody. This is Rich Checkan with Asset Strategies International. I am here in the very ending, the final day of the New Orleans Investment Conference, the 51st annual New Orleans Investment Conference here in New Orleans, run by none other than Brien Lundin, who is the editor of the Gold Newsletter. He carried on the torch of the Gold Newsletter and in New Orleans Investment Conference from none other than James Blanchard III. Am I correct?
Absolutely.
Amazing man who allows us to own gold in this country now. And Brien, welcome. Thank you for taking the time out of a busy schedule.
Great to be with you, Rich. We are in the closing minutes of this grand event as we speak, aren't we?
Yeah, we are.
Yeah.
We are. And it's been probably the best attended I've seen in a number of years. You would expect that with interest in the marketplace. But we've had a little bit of a pullback over the past 3 weeks, right? So we've seen gold and silver pull back. What's kind of your pulse of what that is and where do we go from here? Is this the end, Brien? My only friend.
What do you think I'm going to say, huh?
I think
No, it isn't. If you look at the history of this, I think it's a 19-month-old bull market that we're in. It just seems like yesterday that it started, but in fact it was late February of last year. It hasn't. We've had 4 significant upthrusts and 3 corrective periods.
Yeah.
Those corrective periods have been characterized more by range trading, sideways trading, where you solve the overbought situation more by time than price. In fact, we've only had 10% drawdowns. One in November after President Trump was elected over the speculation that he might sell all the gold and have a Bitcoin reserve in its place. That was unfounded. That was enough to knock out whatever Western traders, speculators were in the market at the time. And of course, we had this last 10% drawdown that we're kind of in the middle of right now. And that was precipitated by just the fact that it got really overbought because the Western speculators came in at the end of the summer. Really, they came in almost like a starting gun when Jerome Powell had his Jackson Hole speech and pretty much conceded that there was a quarter-point rate cut coming.
Yeah.
The rally continued as there was more indications that we might get another 1 or 2 rate cuts out of Powell, and then the market started pricing in Trump's pick next May.
Yep.
And you know that person's going to be cutting like mad.
You think?
Yeah, I think so. So anyway, that's why we had that rally, but we gained $400 in a couple of weeks, kind of a thing. It was just dramatic. And it was really overdone. So we had what is at this point about a 10% drop from those levels. And a good day today as we speak, though, rebounding. We don't know how much longer this correction is going to go, really to what degree, but every correction in this bull market, both of them, have not corrected to the depth or duration that typical technical analysis would have indicated or predicted. And that's because the central banks have been driving the bus largely.
Absolutely.
Now they're still there. They're still buying, but it's been my contention that they are probably buying, not taking advantage of dips in the price. They're buying really strategically. They're devoting a certain amount of money each month or quarter toward buying gold, and because that kind of dollar cost averaging entails buying less tonnage as the price goes up.
Yep.
We've seen what the kind of tailing off of central bank demand.
That's actually a really good point because people are saying, it doesn't look like we're going to get to 1,000 metric tons this year.
Yeah.
Their appetite must be lessening, but they're probably spending the same amount of money or more.
They probably, in fact, are spending more when you look at it because when they started with Russia's invasion of Ukraine, really buying a few years ago, we're talking about $2,000 ago on the gold price.
Yep.
So
same amount of money buys half.
Exactly. So in fact, there's still some strong buying there, but we are getting the Western speculators involved. They're getting involved in this gold market because of what you and I and so many other people have been talking about for the past God knows how many years about the inevitable depreciation of the dollar and other currencies, more rapid depreciation of their purchasing power because of this huge debt load.
Yep.
That
the
now
debasement trade is what everybody's calling it.
Wall Street has slapped a label on it.
Yeah.
We have marketing going for us now.
Yeah.
It's like AI, it's like cryptos, like Bitcoin, it's like Mag 7, all of that noise. So it's a thematic kind of a meme trade now for Wall Street. And that's attracting some money into the sector. And there's so much money out there sloshing around these markets that just getting a little bit of it in these tiny gold, silver, and mining stock markets has a tremendous effect.
So let's talk about the mining shares,
Yeah.
right? So obviously when gold pulls back, we see kind of an outsized effect both up and down
Yeah.
in the mining shares. I'm assuming we've seen an outsized effect
Yeah,
downside as
we
well.
absolutely have. They leverage on the upside and the downside. Silver leverages gold on the upside and the downside, both sides of the coin. So yeah, we've seen U.S. Western traders, speculators get more involved in the market, but they came in late.
Yeah.
They came in late after the gold price had already moved so much. And therefore, they wanted to enter into an area that was still undervalued, had lagged, hadn't moved yet, and that was, well, there was two areas, silver and mining stocks.
The things
And
central banks weren't buying.
Exactly. So they came into that area, and we had tremendous rallies. Now, that puts wiggles in that uptrend line that some we're not that comfortable with, but that's to be expected. I think this is evolving more into a typical bull market where we have pullbacks that can be unnerving at times, but the big trend remains in place, and the fundamental factors certainly remain in place.
See, and that's the thing. If the fundamentals haven't changed and all we've seen was a price change,
Yeah.
then embrace it, right? Take advantage
Yeah.
of it if you can. If not, ride it out, right?
Yeah, I mean, if you believe that they're going to grow their way, or the U.S. and other Western regimes are going to grow their way out of their sovereign debts, or that they're going to be able to raise taxes enough to pay off their debts, or that they're going to cut expenses enough to pay off their debts, particularly in the U.S., then I would not buy gold, I would not buy mining stocks, I would not buy silver. But none of those trends seem to be abating, do they?
I haven't seen a will
Yeah.
anywhere.
Right.
Not enough.
No, and it would take tremendous will. I mean, so much of the spending today is set in stone.
Yeah.
Politicians are not going to vote to curtail that spending. We saw Doge come in and expose lots of government waste and misspending, and at the end of it all, it was barely a rounding error on government spending.
Yeah, that was very unfortunate, by the way.
Yeah.
So let me ask you this: one last question on investments and markets. Right now, given what's out there on the horizon, what's your favorite thing going forward? What do you love the most, and why?
Yeah, I think the mining sector is still it. Gold and silver stocks across the spectrum. I think the miners are still fundamentally undervalued relative to the gold price and to the silver price. Going down the food chain into the developers and the explorers that I kind of specialize in, there's a valid argument to be made. I think a powerful argument to be made that they still remain undervalued according to long-term valuation metrics. Hard to have valuation metrics for explorers because they're all burning matches, as it were.
Gotcha.
But they, in a typical market, exploration plays would have market caps of $20, $30 million in the Canadian mining sector. We saw them getting to $5 to $10 million valuations about a year, the last few years. And so they've doubled or tripled, and now they're into kind of the more normal valuation levels, but certainly not the kind of valuation levels that they would be in relative to a gold price that's $4,000 or thereabouts, and silver that's just under $50, but headed right back above it, I believe.
Gotcha. Well, you write about this all the time in your gold newsletter. You share your thoughts on all these exploration companies. How can people that are listening get a hold of your newsletter if they aren't already a subscriber, which I encourage you to do?
Well, very easily. Gold newsletter is goldnewsletter.com. Next year's New Orleans conference, you can get information on it shortly. It'll be neworleansconference.com. You can order the recordings from this year's event, actually, right now.
I encourage you to do that. I can tell you, every attendee that I talk to says that the quality of the speakers, aside from me, that is, but the quality of the speakers was incredible this year, and the information they left with was just as incredible and amazing. So yes, if you have the ability to get those tapes, you need to. Can we get that link from you so we can put it along with this video potentially?
Absolutely.
All right, and then one more little shout out. We're going to see you again. But it's going to be remotely.
Yep.
But on November 19th, Wednesday at 7 p.m. Eastern Time, you're going to go ahead and join us, Adrian Day and myself, for a final On the Move webinar for the year. And we'll get into more depth some of these topics we've talked about and a few more. Any parting thoughts for our listeners?
Yeah, come to that podcast. We're going to have a lot of fun. It's always a great time talking to you and Adrian. Wonderful conversation, sharing old stories. And we'll be able to share our impressions of this event. So I think there'll be a lot of value there.
Fantastic. So if you missed it, you don't have to miss it. You can still get it. So either with the tapes or with the webinar or both. So thank you all for joining us. Brien, thank you for taking the time out of a busy schedule. I know what it's like to try to put this thing on. So thank you for being with us, and we'll see you all next time.